we will see new record highs in the gold price. I don't know if we'll get them by the end of the year, but I expect gold to be much higher than where it is now by the end of the year.
Why gold has not been catching up with the CPI index, at least for the last, I would say, 9 months or so. As you know, just to recap, gold has been more or less flat and slightly down on the year, while the CPI index has continuously ticked up. Let's just comment on that first, and then we have a few follow-ups.
Well, the issue there, what's going on with gold is obviously the spiking U.S. dollar. Gold is priced in dollars universally, so the spiking U.S. dollar has put serious pressure on gold. That's one of the reasons. You have the rate hikes and the mainstream believing that, this aggressive stance, path by the Fed is going to tame inflation. You had a sell everything environment, dump everything in margin calls and that sort of thing. All of this pressured gold. But yes, why hasn't it kept up with inflation? So I asked myself that. So I went back to the last time that we had really high inflation, which of course was the 1970s, and I looked at the correlation between gold's movement and movement in the CPI. Yes. And the correlation is indeed very high. But what I discovered was in the latter half of the 70s, during gold and silver's biggest run, there was a delay from when inflation spiked until gold and silver prices moved. Right. In gold's case, there was a delay of 1 year before it started to really rise in response to inflation. In silver's case, there was a 2-year delay before it started to move in response to higher inflation. So where we're at now, we've actually seen this before. We saw it the very last time we had really high inflation. There was a delay in gold and silver's response, but they eventually did respond, and of course, went through the roof back then.
Yeah, that's a great point, Jeff. This is another interesting fact I want to bring up and bring to your attention. Gold has been very much correlated with inflation expectations, if you want to measure that with the Treasury Inflation Protection Security TIPS. In fact, there's a near perfect correlation. One could argue that, let's just take a look at the chart. The TIPS has spiked earlier in the year, late last year actually. It's come back down, and it's hovered around a multi-month low. So inflation expectations have actually been coming down. Gold's been very well correlated with the inflation expectations, not so much CPI itself. One could possibly argue, Jeff, that gold may be a leading indicator for inflation. Gold has run up a lot last year. It's already priced in a lot of the inflation we've seen, and now the markets are saying inflation's peaked, gold's come back down. What do you think?
That's possible. Of course, there are a lot of other issues that impact the gold price, not just inflation. Sure. But that near perfect correlation you're talking about is true, because gold did run up the year before inflation started rising strong. And then what were we all told? Inflation is transitory. There were a lot of gold analysts that were convinced inflation was going to be transitory. Therefore, why would gold rise? You don't need it because inflation is going to come right back down. So there's a strong correlation there. But I think in the big picture, I'm not looking at just the inflation issue. I'm looking at any type of crisis that's going to push more and more investors into the gold market. And I think it's more of a monetary issue for me, fiscal, financial, market. It's all those things combined that are going to eventually push gold up higher that a lot of us think it's going to, a lot of us have thought for a long time it was going to do.
There's no bigger crisis that impacts the everyday person more directly than a recession, or even worse, an economic depression. So let's talk about that. How has gold performed in prior recessions, Jeff? You've done research on this area.
Yeah, I went back and looked at every single recession over the past 50 years. There's been 8 of them in the U.S., and gold, perhaps unsurprisingly, has risen in most of them. It's risen in 6 of the last 8 recessions over the past 50 years. In the 2 that it declined, the declines were very mild, like single digits. So if we're going into a recession, again, measuring the specific time of the recession, gold has risen much more often than it has fallen. So it does serve as a hedge during a recession, which makes sense because economic slowdowns cause uncertainty, maybe some fear, whatever, and people will go into gold. That's not surprising. What was surprising is that it's the only precious metal that really responds that way. Silver, platinum, palladium, they all actually do very poorly during a recession.
Mm.
Silver is just the opposite of gold. It's fallen in 6 of the last 8 recessions, and the 2
Yes.
rises were not that big. The same with platinum and palladium. They've fallen in every single recession, the last 8 over the last 50 years, except one. So gold really is the king metal. It is money, and that's why people rush to it. During periods of economic slowdown and economic uncertainty.
There's also excellent point. So there's also, I'm just looking at the DXY, just looking at the past 2 recessions, so not now counting 2020, but 2008 and 2001, the dollar fell during those 2 recessions. That may possibly also, like you said, that might also have contributed to gold's strong performance in prior recessions. Do you think the dollar can remain strong in this coming recession, Jeff?
Yeah, it could. That's the $1 million question, right? Because if it does, that's going to put pressure on everything, including gold.
Yes.
I think if the dollar continues to rise like this, like it has been, and just keeps going, that's going to cause havoc globally, not just in the U.S. So that's going to be a very interesting issue. In fact, that could even lead to the final crisis, let's say, that knocks the U.S. dollar off its reserve currency of the world status. So that's something that could is going to have an impact going forward. Gold and the dollar can rise together. There are times when it's done that. It depends on what the type of crisis is that's happening at the time. Looking at the whole picture, it's not just about the dollar. It's about a lot of other things, and that's why I remain staunchly bullish on gold.
There's one final piece of research that you've done that I'd like to touch on, which is the comparison between gold and housing prices. This is an area of research that I find personally very fascinating. What is your conclusion here from your research?
Went back and looked at how many ounces of gold it takes to buy the average price in the U.S. I've done this research for a while, and I update it every year to see if there's much change. And it's really fun to look at because it can really give you some insightful ways to maybe handle this. So if you go back to 1980, you could buy the average priced home in the U.S. for 75 ounces of gold. In 2011, when gold rose high then, you could buy the average priced home for 118 ounces of gold. Right now, it takes over 200 ounces of gold to buy the average priced home in the U.S. So that ratio could fall by half and not be, out of the norm. So you could see that ratio fall by 2/3, even just to get back down to where it was in 1980. And I think that is exactly what happens is because real estate's bubbly, and the raising rates is making real estate more unaffordable. It's lowering demand, which is going to lower prices. So you're going to have real estate prices coming down. Ultimately, over the next 2 to 3 years, you're going to have much higher gold prices, and that's going to bring that ratio down. So I think that's exactly what happens. So the next couple of years, maybe you can buy a new home or a second home or a vacation home or a beachfront condo if you use gold. If you rely on cash in the bank, that has depreciating value, whereas gold's going to have appreciating value.
So you're saying that it used to cost 75 ounces of gold to buy one home in the early 80s, and now it costs a lot more ounces of gold. So gold has depreciated, I guess, relative to real estate. One could argue then that gold has not served as a long-term inflation hedge just by looking at that data. Could you make that argument?
No, because the ratio pops up and then it falls back down. It cycles just like everything else, right? Like I said, in 2011, it fell all the way down to 118 ounces when gold rose. And in fact, by the way, back in 1980, what was happening? We had high inflation and we had rising real estate prices. Even with that, the ratio fell dramatically because the gold price rose a lot more. So it's two things happening, but you can have just the gold price rising to make it more affordable. So I think that's where we're ultimately headed. I think the next 2 to 3 years for gold owners is not only going to provide protection, but could be a lot of fun in what you could use it for.
Let me ask you this hypothetical question then. Let's say I'm a homeowner and you've got a bunch of gold and we're going to make a transaction. I'm selling my house to you, Jeff, and you want to buy my house with just ounces of gold, not US dollars, but just gold bars. 10 years later, who's going to have the better deal, me or you?
That's a good question. I have to think about that. But I think in the next 5 years, the person with the gold is going to have the better deal.
Okay.
You're kind of buying high now if you're buying real estate
Yeah.
in gold, because gold is lower, real estate's higher. So that ratio is going to improve for gold owners over the next, let's say 3 to 5 years. 10 years out, that's a little harder to predict, but
All right.
it
5
depends
years is
on what
fair.
happens to the monetary system.
Yeah, that's fair. All right. Well, finally, I know you don't like to give exact price predictions, but can you at least give us a direction of where gold's headed over the next year or so?
Since everybody watches the Fed, I think the Fed is, I'll base my answer on that. I think the Fed is going to raise rates probably one more time. There'll probably be a pause. And the amount of time from when they last raise rates to when they actually start lowering rates again, the average time frame historically has only been about 6-7 months. So by next spring, you could see the Fed making a complete about face and lowering rates again, and perhaps even printing more currency. You put that combo back together, all the other things that are maybe going on at the time, you're going to have much higher gold prices. So we will see new record highs in the gold price. I don't know if we'll get them by the end of the year, but I expect gold to be much higher than where it is now by the end of the year. But by 2023, I have a high level of confidence we'll see new record highs in the gold price.
2023. All right. Well, that I guess quells some doubts in a lot of gold investors' minds. Thank you for your comments today, Jeff. I appreciate your time.
Yeah, that's recency bias, though. If you think gold can't make a new high because it's been weak recently, you have to look out big picture, look at the fundamentals, look at the factors that could push it higher and what is more likely to happen. That's what I'm basing it on.